Hey everyone, Coach Investor back on our video for today. So let's talk about arguably the two most important companies in the semiconductor space, ASML, TSMC. Both of them have reported earnings. TSMC before the market opens on Thursday, ASML on Wednesday. Now on Wednesday, ASML did come down 3% when the market opens. Not because it was a terrible report, but in my opinion, just because the company was already so richly valued and the results were okay, in my opinion, even good. We're going to talk about the cyclicality of the whole industry and how it impacts a company like ASML, which, in my opinion, shouldn't really be categorized as a cyclical business. I'll explain why. Then we're going to go over the TSMC reports. TSMC, at the time of making this video, is actually flat and even in the greenish. Futures are red. Maybe that's because, well, of Tesla and also TSMC's outlook. So we're going to go over all of that. But first, let's compare both companies here. I'm here on Coifin. So TSMC revenues fiscal year $73.64 billion, ASML 21.17 billion euros. Now, if you look at free cash flow, by the way, this is in Taiwanese dollars. We basically have to $1 equals 30 Taiwanese dollars. So do the difference here. But still, TSMC much more free cash flow positive than ASML. Still ASML pretty good here, $7.2 billion. Return on equity, both of them exceptional. If you look at ASML, return on equity close to 60%, TSMC close to 40%. Very, very good numbers there. Gross profit, TSMC close to 60, ASML 50%, and then price earnings to growth ratio. TSMC is actually pretty good. It's under 1, it's like 0.63, and ASML 1.5. Again, the closer to 1, the better. Of course, TSMC being below 1, even better there. But of course, with all the risk in that region, maybe some of it is priced in. But we're going to have a talk about their outlook that they gave us, which isn't as rosy as the market would have liked it to be, and even maybe Apple shareholders. So if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I would really, really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first up, let's have a look at TSMC. Revenue was $16.72 billion, which decreased 4.8% year over year and decreased 16.1% from the previous quarter. As for earnings per share or earnings per ADR, that was $1.31. Gross margin for the quarter was 56.3%, operating margin was 45.5%, and net profit margin was 40.7%. Now, no surprise here, right? Seeing the decrease, we've heard it from a couple of companies. I'll leave the example of Intel. They warned us that, well, Q1 isn't going to be a very, very nice picture, and we already see this right now with TSMC. Now they continue here by saying, our first quarter business was impacted by weakening macroeconomic conditions and softening end market demand, which led customers to adjust their demand accordingly. Again, we've heard this in the past, and seeing and probably knowing that Apple is probably one of their biggest customers. If you will see Apple's last quarter, sales was already declining a little bit. Maybe sales will decline even more in this quarter. This might be a hint. Continuing here, moving into second quarter 2023, we expect our business to continue to be impacted by customers' further inventory adjustment. Again, this is something that the market is taking note of. Now, as for the business outlook, revenue is expected to be between $15.2 billion and $16 billion, a bit short of the market expectation, and gross profit margin is expected to be between 52 and 54%. Operating margin is expected to be between 39.5 and 41.5%. Overall, you can see here the comparison between Q1 2023 and Q1 2022. Overall, yes, there's still some growth there. This is again in the Taiwanese dollar currency, not in USD. So on a year-over-year basis, yes, there is still some growth here, but the big decline has been quarter over quarter. Seeing how the current macroeconomic environment looks like, it's fair to say that what they're saying for outlook is not really sandbagging it. Now moving on to ASML here. So net sales came in at $6.74 billion. That's up from $6.43 billion in Q4, of which installed base management sales was $1.4 billion. Now, new lithography systems sold in units is 96, just up from 95 in the last quarter. Used lithography sold is down to 4 from 11. Now, if you look at net bookings, that's also down significantly from Q4. We're now at 3.75 billion, whereas in Q4 we're at 6.31. And then looking at gross profit, we did increase a little bit here, so 3.41 billion. That's up from 3.31 billion, but gross margin did take a little bit of a hit here, not that much. We went from 51.5 to 50.6%. Now, as for net income, that increased, so went from 1.81 billion to 1.95 billion. And then EPS, basic in euros, went from 4.6 euros to 4.96 euros, so close to 5. But in my opinion, if we scroll down, this is the most interesting part. So the overall demand still exceeds our capacity for this year, and we currently have a backlog of over 38.9 billion euros. Our focus continues to be on maximizing system output. Now, before I go into the second quarter here, why is this important? Well, since semiconductor, the space there is cyclical, having such a big backlog means that during that cycle, that weak cycle, the fact that they still have to work through orders from a stronger cycle probably means that by the end of the weak cycle and the start of a new good one, they'll catch up, and then obviously the orders just go up and up from there. So in my opinion, you can't really see ASML as cyclical as the others. And maybe that's why when you look at valuations, it's richer than the competition. Because again, 38.9 billion euros of backlog. It takes some time to go through all of this. And again, going through all of this, you might be at the end of the weak cycle here. Now, continuing here, they say we expect second quarter net sales to be between 6.5 and 7 billion euros with a gross margin between 50 and 51%. ASML still expects R&D costs around 990 million euros and SG&A costs of around 275 million euros for 2023. And they still expect to continue strong growth with a net sales increase of over 25% and a slight improvement in gross margin relative to 2022. So, again, point made here. These effects of what is happening right now, we will technically only see them after they go through the backlog. And since they continue to grow here over 25% and seeing a slight improvement in gross margin, in my opinion, again, I don't think you should put ASML in the cyclical business category. The last couple of things here. So when it comes to share buybacks and dividends, so in the first quarter, they repurchased around 400 million euros worth of shares under the current 2022-2025 program. ASML intends to declare a total dividend for the year 2022 of 5.80 euros per ordinary shares, which is a 5.5% increase compared to 2021. So all in all, I'll start with ASML. In my opinion, nothing to be scared about. If the stock goes down lower, I think you can pick up shares of an incredible company in a very, very good position here. My opinion, this company will just go up and up over time, business-wise, stock-wise as well. The stock will do what it has to do in the short term. Over the long term, it will follow the results of the company. When it comes to TSMC, yes, right now, maybe in a difficult spot. Of course, there's also some risk attached to it because of the region that they operate in. But remember, they're also trying to expand outside of Taiwan, just like Samsung and Intel. But again, it is a tremendous business. Without TSMC, well, we would be in big problems. To me, issues here are overblown. Of course, we're in a tight spot right now. Eventually, that will get results over time. Over the long term, two tremendous companies to hold in your portfolio. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.